Hi, this is Rony Mullick, and you're watching the pre-market show. And let us look at the U.S. markets and how they have ended. So, U.S. markets, we were seeing yesterday that the market was strong, but right now, as we are seeing that the markets did not end well. So, U.S. markets ended in the negative territory. It was consolidating for the most parts, but S&P 500 down by 0.2 percentage. Dow Jones down by 0.47 percentage, and Nasdaq was trading in the green, but even that has closed in the red by 0.7 percentage. And looking at global futures, US futures are even more negative right now. So Nasdaq down by 0.46 percentage, S&P 500 down by 0.37 percentage, and the Dow Jones futures is also down by 0.35 percentage. So everything looks bearish again in the US and the global markets as well. Coming to Asian markets, Hong Kong index is falling with a strong trend, and we can see it's down by almost 1.4 percentage, and it is falling further as we speak. So looking very, very weak. Even the Japanese market is down by 0.33 percentage, Chinese market down by 0.78 percentage, and Korean markets are almost flat, 0.03 percentage in the red. So overall, Asian markets are looking weak. US futures and US markets also looking weak. So that should indicate a gap down opening for our markets. And coming to other things, the crude oil prices are getting hiked once more, and that will add into some kind of bearishness for our markets. So we have to look into the crude oil prices. It is around 93.74, and this trend line has been broken. And we talked about this. Whenever this is broken and the market is moving on the upside, there can be a good move on the upside. So definitely be cautious for the crude oil prices. And apart from that, dollar index is very close to its all-time high of 108.7874 is where it is trading, and 109 is close to the all-time high. Yesterday it touched the all-time high, fell a little, but again it is showing no signs of weakness, and it is going up, and that is a warning bell for the equity markets. Dollar index going higher is definitely bad for the equity markets. So that is exactly what we are seeing. Globally, markets are down. Indian rupee is trading at 79.83, so that is again very close to its all-time high of 80 rupees per 80 rupees per dollar. So that is to be watched out as well. And apart from that, coming to our markets, since the Asian markets are down, US markets have ended in the red. So SGX Nifty is already indicating a slight gap down. It is indicating 17,540, 544. That is around 30-40 points down from where our markets closed. But if you look at the weighted average closing, our markets were actually a bit higher, because you can see 17,623 is the actual closing. So from there, if you consider 17,540, that is significant gap down. And if that is the case, the markets are likely to fall further. 17,450 is where I'm looking for the first support. If that is broken, markets can fall towards yesterday's low, that was 17,350 to 340. And if that is broken by any chance, we will be turning again completely bearish with a target of 17,220 on the lower side. So keep in mind, expiry week, tomorrow is the expiry, monthly expiry. So markets are likely to be very, very volatile, which is on the higher side. And since the global markets are down, and we just had a one-way rally yesterday, so you can imagine the amount of the buying pressure yesterday. So that is again a short covering happening for the most parts. So today, in case today is a very good selling opportunity for the bears once more, because they would like to sell in every pullback. So if that is the case, we will expect the markets to fall even further. So we have to keep in mind they're selling, and then again, like I told you, it's yesterday's low is broken, we can expect further bearishness in the market. And if yesterday's high is broken, again same thing, on the upside we can expect a further momentum. But chances are high that the market will consolidate today between the range of 17,650 on the higher side and 17,450 on the lower side. And that is the view for Nifty today. Coming to Mac Nifty, same thing. There was a good rally yesterday, and if the rally is not sustaining, people would like to short from the higher levels, because same thing like Nifty, Back Nifty also fell from the height, then there was short covering, markets went up, and people would like to short again if the trends, the global cues are negative, and they are negative, so the chances are the markets can fall from here further. So in case the Bank Nifty is opening below 17,000, 38,700, the markets can fall towards 38,200 levels. That is where people would like to book their profits, and if it falls even further, 38,000 is the last level you should be looking out for. That is yesterday's low, and below that you can go aggressively short in the market. In the short term it will turn bearish, so keep that in mind. And apart from that, chances are high that the market would consolidate between 38,700 and 38,000 today. And on the higher side, definitely if yesterday's high is taken out, then we can expect a good uptrending move, but again the chances are very unlikely of that happening at this moment. I mean, it's just one day before the expiry, so be cautious whatever you do, trade with a stop loss. And sector specific news, obviously keep an eye on the sectors that will be affected by crude oil, and that is the Reliance and energy sector will be positively impacted, but sectors like the paint industry, the automobile industry, the cement industry, they will be negatively affected because of the rise in crude oil prices. So those sectors are to be watched out today as well. One more sector, IT, it was already weak yesterday, and Nasdaq was also weak, so we have to see if IT index falls even lower, so that is also to be taken into account. Banking sectors were looking strong, and let's see if the banking sectors continue their rally today as well, especially the PSU bank. PSU banks were looking particularly strong. So all of those will be discussed in the today's post market show. So until that time, that is all I have. Thank you for watching, and have a great day.